Today's question came from one of our clients who is buying life insurance for him and his spouse and wanted to know about beneficiary designations, especially for his children. And that's a good question and something that should have careful consideration. In this situation, the spouse and crosswise to her husband, they were both the primary beneficiaries. They were buying it to cover the economic loss if either the husband or wife passed away. But what happens if both the husband and wife were killed simultaneously? That's when you have a contingent beneficiary, and in this situation, the money was to take care of the children. And what are their options? One is to make the children the beneficiary. That would get them the money, but the pitfalls of that is the fact that it would have to be covered by the courts to make sure that there was somebody to take care of that, and that would entail excessive costs and legal involvement after death at a time when you least would want that type of involvement. The other thing is you can set up with a will or a trust where that money would be taken care of before something bad happened, and find out a way that the courts would accept to dispose of those assets to the contingent beneficiary, the children, until they reach the age of majority. You could list in a trust or list in a will to have a favorite uncle or an attorney. You could have different methods in order to take care of the money and make sure it got to the children. But just leaving them as contingent beneficiary, while it will eventually take care of getting the money to them, there is some legal complications that the courts would become involved in. Good question, and something that does require some extra attention.